And hello everybody, welcome to the Mango Grove. My name is Krisha, and this is today's Bitcoin and Cardano analysis video. Now, I'm going to jump right into it because I always spend time with the pleasantries. Although I like saying hi to you guys, I like cracking those jokes. I did get back from the gym, so now I have incentive to wrap this up and we'll go and freaking grab a bite. I'm so sore from leg day. I always hate leg days. But anywho, let's get into today's agenda for the day. Okay, so today, the first point on today's agenda, guys, I really want to talk about macro sentiment right now. Right, people are left wondering at this point as well, should I buy the F and dip or should I sell it all? Right, was this rally just one big, relief rally in the middle of an overarching bear market? Because ultimately, the fears of recession are still looming on the world right now. Right? So we'll be talking about that today. I really want to address this. In addition to this, I will also be addressing, Bitcoin buyers versus sellers and who is the volatility, which side is the volatility favoring right now. And I'm going to be talking about the immediate timeframes because this is essentially going to help us understand, okay, do we see a pullback here, right? And how intense could this pullback be? All right. Now, in addition to this, and what I really want to tie this in with is, the fourth bull run trigger. So we're going to be tying in these 2 points today, okay? The volatility and who's it favoring right now, the sellers or the buyers. And we'll be going over the bull run trigger because I think this might be giving us a hint on how far low can Bitcoin actually go. Okay, so I'll be going over that fourth bull run trigger with you guys once again, and then we'll be wrapping up with the altcoin of the day, which is Cardano. Of course, I will be including timestamps in the description below, so don't hesitate to go and use them. And it goes without saying, guys, that like button goes a very long way. It's been encouraging Sean and I to, do better to get you guys more information when it presents itself. And if you guys have been enjoying the content, make sure to smash the like. But hey, if you want to wait until the end to see if you derive any value from here whatsoever, then I think that's completely fair. You can wait until the end. So with that, let's jump right in. Cool beans, let's start off with point number 1, BTFD or sell it all. Was this one big relief rally for the downtrend to continue, or is this an inflection point where the market actually reverses, getting into the next bull run phase? Okay, where we start a fresh new market cycle from, accumulation, markup, distribution, and markdown. So let's talk about that today because I'm sure a lot of you are going through the emotions with the current pullback that we're seeing on the chart right now. Right, and I went through a similar feeling. You need to understand that this was during the 3K phase right here. And I was wondering to myself, how do I get enough conviction on this being a market reversal for me to get in a good allocation? Well, for that, let's go ahead and consider the current sort of backdrop. Now, understand where the uncertainty is coming from. There are still fears of recession looming on everyone's heads, right? In addition to that, we have Jay Powell coming out almost on a monthly basis saying that, hey, he is going to be increasing interest rates. And he has been increasing interest rates. Why is this important and why does this have a negative impact on the market? It's because, guys, interest rates ultimately, once again, I say this time and time again, is the price of the big money, okay? It is the price of money. That is your interest rates. This is going to dictate to your rates on your mortgage, the rates that you get for your lines of credit. This is going to determine whether people want to go risk on, okay, or risk off. Okay, so plus, minus. Alrighty, so the lower interest rates go, people usually go risk on. They go farther out the risk curve. Alrighty, so now we're seeing that, okay, interest rates have been going up. Now, in addition to that, if we're just looking at the technicals, so far we only have a 40% up thrust. I know I use the term 40 very loosely there, but no, it's been a very volatile 40% up move from Bitcoin, right? But what's important about this technical picture is that we don't have an established uptrend just yet, and that's what's getting people a bit antsy. Yes, we have a higher high on the chart, okay, but there is no ebb and flow of price action saying that, okay, you know what, this is an established uptrend. We're likely getting into the next bull run phase. Well, then how can we be certain that this, in fact, is an inflection point and the market does head for the next bull run, right? How can we be certain about that? And quite honestly, guys, you cannot be certain, okay? There are no certainties when you're playing the markets. In fact, with that, I actually want to bring up one of Sean's most recent tweets where he says that, okay, what if price goes down lower from here, though? Says, okay, it could, and that's called risk. You manage risk. You don't avoid it. If you're trying to avoid risk, what are you even doing here? right? And that really struck a chord with me, because I'm sure that that's what people are trying to gun for, right? They're looking for that big conviction play, but they want certainty on their conviction play. You're not going to get certainty here. You can only get probability. What are the key data points that we have available to us right now as far as the information that's concerned? Well, number one, we know that, okay, from where price is at right now to that previous high, price has drawn down a good 67% already, right? To the lowest point, that was a good 77% from the top. Right. In addition to that, we know that markets are forward pricing as far as the interest rates are concerned. And what the market is about to price in, well, is a complete stop to the interest rate hikes. Right? If we know that, okay, this is y-axis, x-axis is zero bound on the interest rates, while Jay Powell has been pushing it up by 75 basis points since last summer, right? Over the past 2 months, he slowed those interest rate hikes significantly from 50, then down to 25, and now the market is anticipating him to stop the interest rate hikes entirely. Okay, so basically flatline on interest rates. Now you can anticipate how that plays out for liquidity, right? Liquidity is essentially what's going to drive these markets. All right, so if there's any advice I'd give you guys today is follow the money. Now, as far as the TA is concerned, we've been looking at 4 bull run triggers, right? 4 bull run triggers, out of which 3 have already gone off. All right, that's 75% on the bull run triggers, 75% as far as the probability is concerned. I'm saying that, okay, the bulls have the edge here. Okay, so all we can play to right now is the data. The data so far is saying that the bulls have control. Okay, now as far as the rates are concerned, we know that markets are forward pricing. Okay, so getting into this summer, we're likely going to start seeing further run-ups. Now, my conviction on this play is that we are indeed at an inflection point. However, even in an inflection point, guys, we can see ebb and flow of price action. Okay, so we're looking at those higher highs, higher lows, much like what we saw here, getting out of that COVID dump, right? We saw, okay, price ran up to that 10K region, drew down to 8.4K, ran up once again, taking out the last local high, all the way to 12K, came down again at 10K, and then off to the rallies, right? We can see something like that with intermittent pullbacks. So prepare for that. So as far as a BTFD is concerned, or a sell at all, for me, I believe that the next dip is going to be a buy the dip opportunity. So now the next question is, well, where is the next dip? Okay, if the dip is coming, what can we anticipate next? Well, for that, I really want to talk about the buyer versus seller and, well, who's the volatility favoring right now on the lower time frames. All right, with that, we can get away from this mess and get right into the Mango dashboard, because the Mango dashboard is essentially going to give us a rundown on the volatility. Now, we want to see who's got the edge in terms of the volatility. Is it the volatility to the downside or to the upside? Okay, because that's essentially going to give us a hint on how far low can Bitcoin actually go with the current sort of dip that we're seeing on the lower time frames. Now, for those of you who are low-key unaware of the downtrend on the lower time frames, here's what the Bitcoin looks like on the 1 hour time frame. You can see that we're currently in a downtrend on the 1 hour time frame. Okay, so now the question is, does this actually continue to the downside, or do we see a rally off of this support right here at around 22.9K? So for that, I would really want to get into the dashboard, because I feel like the volatility profile is going to help us with that, with that signal. Okay, so now I'm going to get on over to the 4 hour time frame. You can see here that Bitcoin USDT is currently short, came in 3 days ago. Okay, now notice when the reversal came in 3 days ago. However, the returns on it is just 1.1%. Okay, telling me that yes, while we are seeing follow through, it is very, very minimal. Volatility at 43. Telling me that the bears still have a lot more juice left in them to take Bitcoin down even further, right? But now question is, does this downtrend on the 1 hour time frame cascade on over even more? Do we see that meltdown? Do we see this trend continue perhaps onto our 12 hour time frame, right? So this is what the 12 hour looks like right now. Well, for that, let's get on over to the dashboard. Has the dashboard really given us a signal? Has the dashboard on the 12 hour flipped short? Now, if I take you guys on over to the 12 hour time frame, you'll notice that we're still long on the 12 hour. This reversal came in 33 days ago. So for over a month now, Bitcoin has been bullish on the dashboard, right? And if you caught the trade on this when the signal was given to you, okay, you're up by a good 36% on that trade. But check this out now. The thing about these returns is that just a couple of days ago, that was sitting at 44%. Because if you hover over it, it tells you exactly when the reversal came in. It came in when Bitcoin was sitting at 16,861. All right, so now these returns are going to reflect the drawdown that we literally just went through. Because notice, we have not received the short signal just yet. Right, so now we've drawn down a good 5.5% from the highs. Okay, so now, yeah, we're seeing volatility tick up, right, with that green tick right there at 53. The thing is that this volatility is leaning more bearish because volatility is ticking up, but price is coming down. Your returns are coming down, telling us that, hey, the bears have the edge here. As far as that volatility is concerned, immediate time frame volatility, the bears have control here. Okay, so now main question is, how far low can Bitcoin really go? Now notice the trend on the 12-hour time frame says long. Okay, so this is still bullish, but now looking at the 12-hour time frame, put on my Mango dynamic indicator. Okay, there are a few signs pointing to even lower for Bitcoin here. The first is, well, the Mango dynamic and how we're using the dynamic as overhead resistance. Okay, also notice the confluence that it has with the $22,944 region. For those of you who have been following my analysis for some time, you guys know exactly where I extrapolated those levels from, right? Those were extrapolated using price action when we were sitting at these regions right here, as well as the momentum on the chart. I've been harping on about these levels for now, well, weeks on end. So we're currently using 22.9K as that overhead resistance, which is also in line with the Mango dynamic indicator. And now, in addition to that, if I go ahead and turn on my Ichimoku cloud, you'll see that we're currently using the 10 SMA and the 21 EMA as overhead resistance as well. There's a lot of resistance overhead on the 12-hour time frame. Well, support then now turned into resistance that Bitcoin has finally broken. So now we have a horizontal that's been taken out, Mango dynamic that's been taken out, the 21 EMA that's been taken out, and the 10 SMA that's been taken out, and the Tenkin. Okay, all of which were being held as support ever since the run up from 16.6K. So this is one big fat bearish tilt for Bitcoin on the 12-hour time frame. All right, so yes, I am anticipating this to come lower. Okay, but now how low? Now this is where I have two possible scenarios for you. Right, primarily hinged on that 12-hour trend. Now, yeah, while the technical is on, looking at the chart, everything is freaking bearish, man. We've lost a lot of support. However, that being said, we need to heed to the trend. Now, the trend on the dashboard on the 12-hour time frame is still long. Okay, we got to be very, very careful here. So now if I take you guys back on over to the chart, I'll tell you two plausible scenarios as far as pullback opportunities are concerned. Now the first scenario is going to be a shallow pullback, and the second scenario is going to be a much deeper pullback. Now this one has a lot of confluence on it. However, we're going to have to first wait for this one to be taken out, this one to be negated, to then expect scenario number two. Okay, so now let's talk about scenario number one. Scenario number one is where, okay, price is currently up against that overhead resistance at 22.9K, but is there anything else underneath us right now? Is there any other critical level that we should be careful of, that price could come down to and give us that bounce, right? Now, if I take you guys on over to the daily time frame, I want you to notice where the 21 Tenkin is coming in at. 21 Tenkin is coming in at $22,425. Okay, but now I'm going to go ahead and mark that out with a line segment. Okay, I'm going to make this a tad bit thicker, make it 4 pixels. But now, in addition to that being the Tenkin 21 EMA, if I go ahead and turn on my Mango dynamic on the daily time frame, okay, you'll see that it is also dynamic support on the daily time frame, coming in right there. Okay, but now check this out. What really makes this stand out as another very important region of support underneath us is that, remember I was telling you about that investor trigger? That's, well, I'm looking for that to go off. It's not gone off just yet, but that was the 4th bull run trigger. If I take you guys on over to that trigger, okay, that trigger, guys, was hinged on the Mango dynamic in addition to the 55 simple moving average. Now I'm on the weekly time frame. Let me go ahead and, well, bring up the calculation cell, which was based on the Ichimoku method, right? I'm going to do that, and I want you to see where we are at relative to that indicator. Okay, if I just zoom into this price action, the bottom of the cloud comes in at around 22,100. Okay, I can just go ahead, smack in another line right there, and we're going to make that a little zone. Okay, so I think this is going to be our first tap as far as the shallow pullback is concerned. I will not be anticipating further downside from Bitcoin until we show weakness along this region right here. Okay, I want to see price stutter stop here, especially on the lower time frames, before I anticipate further downside for Bitcoin. Alrighty, now question is, how far low is this from where price is at right now? Well, let's go ahead and then check that out. So let's get back on over, clear out our chart, get back on over to the 12-hour time frame. Now this is the zone. This is how close we are, by the way. Okay, from where price is at right now, all the way down to, well, the bottom of the zone. That's just a 3.77%. Yeah, okay, 3.77%. Now this was one of the possible set of outcomes that we could see on Bitcoin's chart if it loads, getting on over to the Ichimoku setup once again. Okay, so what we could see, okay, price come down, tap into, well, that bottom of the zone, basically sweeping these wick lows right here and all the liquidity stops underneath it, okay, before taking price back up and closing back over the 21 EMA. So that is a plausible case, but I think the dynamic will sort of, it highlights a potential liquidity tap zone for us. Okay, so I'll be keeping an eye out on how price reacts off this entire zone before I anticipate further downside from Bitcoin. Now, if we actually do get that, if price actually does show us further weakness along this entire zone right here, what other downside target I'm going to be anticipating next? Well, that's going to bring us to, well, target number 2, right? That is going to be our much deeper pullback target. And that's essentially going to be a C-span trade all the way down, okay? Now, I'll be looking for a trade from the Tenkin on the daily time frame all the way down to the Kijun, where the Kijun comes in at around 20.2K. Now, I particularly really like 20.2K. Okay, now here's why. I'm going to go ahead and mark out this entire region as support underneath. I think this is going to be the next amazing bid opportunity to be had on Bitcoin's chart. If I go ahead and knock off all of my squigglies, give me a second. Okay, clear out the chart. I want you guys to pay attention to this region right here, okay? The range, by the way, comes in from 20.8K, which is also our midpoint. Remember, we're looking at this entire zone of oscillation for Bitcoin, from 18.7K going all the way up to 22.9K, with the midpoint coming in at 20.8K. Okay, so I'm looking at this entire zone. Top of the range comes in at 20.8K midpoint. Bottom comes in on the daily Kijun, sitting at 20.2K. But now check this out. If I take you on over to the 12-hour time frame, what else is lining up with that region right there? All right, we have Kijun support on the 12-hour time frame as well, in addition to cloud support. Okay, notice how we have the entire Ichimoku cloud swinging in right underneath us. How about the 2-day time frame? What's on the 2-day? 2-day, we have the Tenkin sweeping in right there along that region. Right? How about the 3-day time frame? What's on there? Oh, we have the 21 EMA sweeping in right there, and the Tenkin. Okay, 21 EMA, Tenkin, and the Kijun. Don't forget. So notice, I'm just going to turn this off just for a bit. We have Tenkin, Kijun sitting parallel to each other with the 21 EMA sweeping right up. Look at the red box territory right on that zone. How about the 4-day time frame? 4-day as well. We have 21 EMA, Tenkin, and Kijun sitting right there. How about the weekly time frame? We have the weekly 21 EMA that has not gotten a test just yet. Okay, price coming down there to give that a test. That's going to be the first 21 EMA test that we've seen since the breakout from 16.6K. Okay, so once again, we have 21 EMA right there. But now, in addition to this, if I turn on my Mango dynamic, there's weekly dynamic support. How about the 4-day? That is 4-day dynamic support. How about the 3-day? That is 3-day dynamic support. How about the 2-day? All right, we have 2-day bottom of the dynamic right there as well. So you can see the amount of confluence that we have on this region. Okay, so price coming down there is going to be a beautiful bid opportunity in my opinion. So that is going to be the high region of contention between the buyers and the sellers, and whichever side wins there wins the trend. Now, as far as this entire play getting negated is concerned, we got to prepare for either side, because ultimately there's one thing that we cannot ignore is, well, this current uptrend that we have, that trend on the 12-hour time frame Mango dashboard is still long, and it's long from the 12-hour going all the way to the weekly time frame. The weekly also flipped long right now, okay? This long signal came in 7 days ago. Prior to that, guys, it was short, and it was short for over a year. So this is a cyclical trend that just went off. So it's very important that we play to the momentum of everything. So we got to consider the side wherein this trend actually continues. So at what point will I really be anticipating for all of these two sort of bid zones to get negated? Bitcoin says that, no, you think you deserve a pullback, but I am not allowing it. At what point did the buyers step in with conviction at this region? Well, for that, we're going to get on over to the 12-hour time frame. We can use our indicators to help us, well, understand what the buyers and the sellers are doing, who's got the more momentum here, who's got more firepower over here. So as far as further upside is concerned, I want to see price reclaim the 12-hour dynamic. So I'm looking at multiple candle body closes over the 12-hour dynamic. In addition to, I want to see price reclaim the breakdown point, okay, which came in right here, this region right here at 23.3K. For those of you who watched my previous video, there was a critical region on the monthly time frame. You guys know that, right? Monthly level, sitting in right here. Yeah, there we go. The close came in at around, 23,322. If you guys want to take note of these numbers, go ahead and do so. But yeah, I want to see price reclaim the dynamic as well as live over 23,322. If we can do both, I'm saying that the bulls have the edge once again, and we're likely going to start seeing trend continuation from there. And yeah, this pretty much wraps up my analysis on Bitcoin. If you really had to ask me, Krisha, which scenario I think is going to play out here, I'm looking at the direction of most pain. Where is the market going to feel most pain? And I feel like that scenario is going to play out. And I think most pain is going to be price coming down, tapping the liquidity right here. Because notice how we'll be taking out all the wick lows. Wick low, wick low, wick low. We'll be tapping into all of the stop losses right here before the bulls accumulate their positions and then take price back up. For those of you in the Mango Seed program, you have an entire module dedicated to order flow that will tell you how to use these strategies to get in some amazing bids, okay? Also basically keep you safe on stop losses and also get you into some amazing trades. So make sure you're giving that one a rewatch. But yeah, I think that's going to be the direction of most pain, where we come in, tap into liquidity, and then the bulls take this up for the next rally to the upside. Direction of most pain. But yeah, this pretty much wraps up my Bitcoin analysis. With this, we can get into the altcoin of the day, which is Cardano. I'm not going to be spending too much time on Cardano today because I do believe it's a very simple picture. If I take you guys on over to the Mango dashboard, let's start off with the Mango dashboard to see what Cardano's trend is doing on there. Now, usually Cardano is one of those coins that has a lot of heavy trading volume on it. However, you'll notice that it's dropped down on the list significantly. We have a bunch of mid caps on the list. However, if I scroll down, look for Cardano, there we go. ADA USDT is short. Okay, so now this is telling us that we're seeing a pullback on the lower time frames, 4-hour time frame specifically. This came in 16 hours ago. So far, you're up by a good 0.94% if you took a short position. However, notice volatility dying down. So yes, while price is moving downward, this is telling me that it's breaking down very, very slowly. It's like nibbling away at the bulls. Okay, so now this is the short trend on the 4-hour time frame. But now, question is Cardano in a high time frame uptrend? Well, for that 12-hour time frame, you know what? I'm just going to go ahead and filter out Cardano from the list. Beautiful. Okay, Cardano on the 12-hour is still long. Okay, so now what this is telling me essentially, let's go ahead onto Cardano, ADA USDT. Now, when you see trends like that, when you see the 4-hour time frame basically flip is short, but the higher time frame is long, what this is telling you is that in a macro uptrend, you're seeing a intermediate or a minor downtrend. Okay, now that is when your 4-hour can flip short. Okay, that's when you'll see those 4-hour signals actually go off, but only for it to give you the next higher low before actually rallying to the upside. Now, question is, do we see this, right? This is one big question mark. Now with this, we can actually go ahead and assess the chart to see that, okay, is this once again a buy the dip opportunity, or is this a further meltdown that we're about to see? So for that, I want to first assess Cardano on our macro timeframes. Okay, the macro is becoming very, very important, and this is why I wanted to dissect Cardano today. It's because of what we're doing against a critical region of resistance, being the mango dynamic on the weekly time frame. Now, if I just zoom out at this picture, I want you to notice how well the price action has respected dynamic resistance overhead. Right, ever since we broke down, ever since we started the bear market that started on November 2021, every test of the dynamic was met with resistance. We tried right here. In fact, this got front run resistance, right? This is the first time since then that we've actually even managed to penetrate the cloud. Now, notice that we don't have any confirmed closes over the dynamic cloud just yet. For those of you who want to take down the numbers of dynamic resistance overhead, for those of you who do not have access at the very least, dynamic resistance comes in at around 39 cents. Okay, you can go ahead and note that down. Now, as far as the technicals are concerned on Cardano, I do believe that we're already sort of propelled into a bullish phase. Okay, now just a couple of weeks ago, I was going over a bull market signature with you guys on Cardano's chart, primarily hinged on the 4-day time frame, right? Now, similar to the weekly dynamic, the 4-day dynamic was also being held as that overhead resistance. Every attempt at reclaiming it was met with rejection ever since its breakdown, ever since the start of the bear market. Right? So now this is the first time since the very beginning that we've actually managed to reclaim the dynamic. And not just that, we have now a green cloud telling us that bullish momentum is picking up on this chart. And I am in agreement with that. Okay, now as far as Cardano's next bid opportunity is concerned, I do believe it's going to be a long trade. Okay, just given this 4-day momentum I do believe that Cardano is at an inflection point. Okay, if I take you guys on over to the weekly time frame, as far as the bid opportunity is concerned, I do believe we're currently sitting. It's going to be a range. Okay, I think it's important that I mention that it's going to be a range wherein We go from the bottom of the dynamic cloud all the way down to support at 36 cents. We're looking at 38 cents, okay, going all the way down to 36 cents. This is going to be the bid zone for Cardano. Now, of course, you can scattershot your bids and then risk management off of that based on your variables. For those of you in the Mango Seed program, I urge you guys to use your MRM sheet for this. Okay, so this is essentially going to be the bid opportunity as far as the target to the upside is concerned. Now we're looking at, well, immediate resistance overhead as far as our support and resistance is concerned. In addition to, there is a massive pattern play here on Cardano's chart. For those of you who do not spot it, allow me to just clear my chart out. Okay, what we're looking at is a falling wedge. Okay, this is it right here. I've checked the volume profile to confirm the wedge pattern. Okay, and this is it. So this is the falling wedge that I'm looking at. In fact, we'll take it with these candle wicks right here. We have more market consensus on that. Okay, so that's that. That is the wedge. Now if I go ahead and take the measured move of this falling wedge and plot it on the break of when Cardano actually broke that wedge to the upside, where does that come in at? That will take Cardano all the way up to 70 cents. Okay, so we can go ahead and mark that out right there. Notice how it's going to line up with these wick highs right here. Okay. And now what is that move to the upside? We can be a tad bit conservative and take it from that 38 cent region. Okay, so top of the red box territory all the way up to our target. That's going to be a good 86% to the upside for Cardano. But I do believe that Cardano is at an inflection point at great levels, and what makes a trade a great trade is how easy it is to manage. Okay, so yeah, eyes on Cardano. I think something very interesting is happening on this chart as far as the technicals are concerned. Now, this is all I have for you for today's video. I hope you guys enjoyed this one. If you did, make sure to smash that like button. And yeah, I will see you in the next update. With this, trade safely, trade stress-free, trade the mango way, trade the easy way. Ciao, you guys.